And good afternoon. Welcome into Market Talk for Tuesday, March 16th, 2021. Great to have you here with us once again. A good afternoon. I'm your host, Jesse Allen. MarketTalkAg.com. That's our home on the web. You can find us there, MarketTalkAg.com. You can find us Facebook, Twitter, Instagram. It's all the username at Market Talk Ag. You can find our great streaming sources online, Spotify, iHeartRadio, Apple Podcasts, YouTube, so much more, and all of our great radio affiliate partners from the Dakotas and Minnesota down to Texas and everywhere in between there throughout the heart of the country. You can find all of our great partners there at markettalkag.com. Well, we had a fairly quiet but solid day throughout the grain trade. Hogs pushed their way higher as well. Let's talk all about it. Let's bring in Jim McCormick from agmarket.net joining us this afternoon. Jim, good to see you and talk to you again, sir. How are you?
I'm doing well. Thank you for having me on, Jesse.
Jim, appreciate the time as always. And let's jump into today's trade. Corn, I think, was probably one of the bigger stories today. That huge, almost 46 million bushel sale to China for old crop kind of helped prop up the market today, it seemed. What do you make of that big export sales announcement and how corn finished today?
Well, I think there's two ways you can look at it. The first one, I think it kind of should reassure the trade out there that the fact is China truly does need this corn they're buying. I mean, we hadn't seen the corn sales. I think there was a little bit of fear that maybe we weren't going to export it. We'll see those traditional Chinese cancellations. When they come in and buy a little over 46 million bushels of corn, that tells you they need the corn. I do also think it's a little bit of, I call it corn diplomacy. The Biden administration is having their first official meeting with the Chinese here on Thursday. So there's no doubt about it. The Chinese are trying to put a good face on this relationship in the United States. There are some reports that China is going to try to press the Biden administration to maybe lower some of those tariffs that Trump had put into place if they agree to buy more products. I'm not sure where we're at on this meeting. I mean, it sounds like this is more kind of get to know each other than actual trade talks, but they're definitely putting their best foot forward. The real question, I think, to the trade right now is, are we going to get more sales tomorrow? When we saw these purchases from the China earlier in the year, we saw multiple days of announcements, so that's something we'll be watching for the next day or two.
Now, you and I were chatting a little bit before we jumped on air, talking about the spread here in corn. You want to talk about the spreads and what you're seeing there? Because I know you see some interesting things there.
I mean, the spread, what we're talking about is the old crop, new crop spread. It's been a very volatile spread. Historically, in very tight years, like we're seeing a bill carry out at 1.5, a lot of people think it's going to be closer to 1 billion. The old crop will really race premium to the new crop. Early in the year, that spread, the July over the D's is around 40, 45 cents. It pushed to about 90, 95 cents in February. And in the last couple of weeks, it's collapsed back down to about 40, 42 cents, kind of held the early year lows. And now we're working back up to around 65, 66 cents. Hopefully that spread should continue to work higher, I believe. The reason why I think they're playing that spread, Jesse, is the report coming in. China's buying the corn, suggests these ending stocks are continuing to tighten. If you listen to any users out there, the basis around the country is fantastic for this time of year. That tells me that quarterly grain stock report should be friendly, which should be supportive of the old crop grain. On the other hand, the new crop, which is struggling a little bit near term because a lot of people are expecting big corn acres, 93 plus million acres. At least that's what the survey is going to show. I don't think we'll plant 93, 94 million acres. I wouldn't be surprised if the survey shows that at the end of the month. So that would set this spread up perfectly to buy the old, sell the new. And it looks like we're definitely seeing some money plow into that spread trade the last 2 days.
Well, and you mentioned that report coming up here in a couple of weeks, and looking at new crop sales, I know some producers have been making some sales. They got that spring insurance price in. They've been able to kind of forward price a little bit here. But looking at where things are at in this corn market right now, what do you tell producers if they're looking to maybe still put some new crop corn sales on the books? Any thoughts there?
We're recommending it, especially those uninsured bushels. I mean, a lot of people buy that 85% crop insurance, which means they got 15% of the crop that's not marketed. But the reality is it's usually more than that. Because remember, your 85% is your APH. A lot of producers produce a lot better than their APH. So you might have this up to 20, 25%, maybe a little bit more of your crop technically that's not hedged via the crop insurance with a normal crop. So we're recommending go ahead and get some of that protected either via two ways. Consider buying puts. That puts a floor in, but leaves the upside open. Look at maybe like a June put. Short dated, that gets you protection through roughly Memorial Day weekend, but leaves it open to see what happens if we have a spring weather problem. I've had other customers, Jesse, just go out and actually physically sell cash grain. They're getting good basis bids as well as an HTA. And then I was looking at maybe going out and buying like a September short dated vertical call spread where you're buying the right to own like a May the December corn through the end of August, buy like a $5, $6 vertical call spread. It gets you, some ownership, because the reality is when you're looking at a carry out around 1.5, that could be closer to 1 billion when it's all said and done. We are on a razor's edge. So any kind of production fear, you're too wet, too cold, too dry going into spring, summertime, this market could tear itself, tear higher, and just, you want to be able to take advantage of it. So re-own some of that grain is our recommendation.
Yeah, it definitely seems like being able to re-own and have that top side open is the move right now throughout all the commodities. And you mentioned weather issues. We might see some of that heading into spring. It's hard to tell right now here in the U.S. Jim, on the soybean side, it looked like that bean oil market and that world veg oil market was maybe collapsing a little bit, but I noticed bean oil rallied back towards unchanged today. Soybeans were up a little bit. What do you make of that move today?
Well, right now, I think the bean oil we saw around a profit taking, but right now the world veg oil market's still very, very tight. There's a lot of optimism on the biodiesel. That's got people excited as well. But the big thing going on in the veg oil market is the world is opening up, especially in the United States. The demand for people going out to eat is increasing, and that's driving the demand. As for the beans, they're kind of a little bit of a tug of war right now. Our ending stocks are desperately tight. The government's put them at 120 million, and the only reason we're at 120 million carryout is they're anticipating we're going to import 35 million bushels of beans. Now think about this, Jesse. On a normal year, we're going to import around 15 million, primarily from Canada. We're going to import an extra 20 million. Where's that going to come from? South America. So the reality is is the only reason our carryout's not desperate level is it's imports from Brazil. So the market's kind of saying, well, we're okay. Brazil's got around 133 million metric ton crop. It's going to bridge us into our harvest. But if we start having problems with this year's crop, can't get it planted, pollination problems, too hot during the flowering stage, you name it, this bean market is still set up for another explosive move, but it might take some time.
Well, and you talk about Brazil and you look in South America and they've been having weather issues, and some folks are maybe saying that those weather issues could be a little understated. What are you hearing from any folks that you guys have contacts with in South America, how that crop really is shaping up in Brazil and Argentina?
I think understated, as I would agree 100%. I think Brazil's got a problem with too wet. A lot of quality issues, and I think that's causing a problem. I think that crop's shrinking back a little bit. In Argentina, they went 6 weeks without any really good rain. They're finally getting some rain, but the reality is it's probably too little, too late for a lot of those crops. So I think it's going to take time. Think about this, folks. Not to switch crops, but the government was talking a huge carryout crop, around 180 back in August for the United States, and ended up at 172. So the reality is we just don't know where this crop is in South America until they harvest it. And right now, the indications are it's going to get smaller. And how that reflects on the corn market, plain and simple, is if you can't get this Brazilian bean crop out, you can't get that safrinha corn crop in. Now, Brazil produces roughly around 110 million metric ton corn crop. 80 million of that crop is a safrinha crop. And that's the crop they tend to export. So if you take 10, 20% hit on that safrinha corn crop, it's going to continue to tighten the world balance sheet, which is already desperately tight. And guess what? It's going to drive even more demand in the United States, which means we'll see more purchases from China like we saw today.
Yeah, very just tight all around wherever you look at it. One change somewhere could really move all of these grain markets, it seems, one way or another, Jim. It just seems like you mentioned razor's edge, and it seems like we're just on the razor's edge everywhere right now.
We are. I mean, the reality is, the world supplies have been very, very tight the last couple of years. China's been buying everybody out as they had that trade war in the United States, and they've drained the ending stocks around the world. So we are just in time production at this point in time. Now that might work in the automobile factories. The fact of the matter is, if for some reason you don't have a problem, then you can't produce a Ford or a Toyota truck for a day or two or a week or two. Let's face it, the world's not going to end. The problem is when you got ending stocks that are down to 10, 15 days ending stocks in the world and some of these commodities, you're setting yourself up for a very bullish play. And that brings into the macro picture the inflationary aspect. When you look at the cost of product around the world feeding people, it's only getting higher. China came in and is buying the living tar out of soft white wheat. Now, an American might look at it and go, well, what does that mean for me? I don't produce a lot of wheat. Well, that's the wheat that's produced in the West. That's driven the price of pasta wheat. That's the wheat we use for pasta to 20, 25-year highs. That's going to be passed on to food inflation, and the consumers are going to pay more for it. And as that goes up, it pulls everything up. And then what does that bring? That brings investor money in saying, how do I handle inflation? Well, you buy commodity, folks. Well, guess what? Corn historically is, you look at corn at $5.50, you're like, hey, man, that's kind of expensive. Well, you look at where we were in 2012, we were at $8 corn. Beans at $14, that looks kind of expensive until you realize we're at $18 beans as well. So the funds look like, hey, we've got room to run on the inflationary play. You're throwing a weather mark in it, sets us up for an exciting summer.
It really does set us up for an exciting summer. One thing on wheat before we move to livestock, it seemed like that wheat belt, the Central Southern Plains, got that quote-unquote $1 million rain here over the weekend. This wheat market was under some pressure early today, but ended up rallying back, kind of finished mixed right around that unchanged mark. Any thoughts on that wheat market to add to what we talked about with corn and beans?
Well, I think that the wheat market today performed really technically well. Like you said, the market broke early on that rain, definitely kind of $1 million rain. But we went down. The Kansas City wheat took out the 100-day moving average. The Chicago wheat held the 100-day moving average and reversed back out. I think you get to be very positive technically to open, break hard, and come back. A perfect day would have closed higher than yesterday's highs, but I'll take it. Technically, the market rejected the lows, held the support level, and hopefully that sets us up for some more moves higher. Now we got to watch the production, the weather. Like you said, it's $1 million rain, but it's probably one of the multiple $1 million rains we're going to need, especially in the Western Corn Belt. I know Kansas got a couple inches of rain, but that's not going to get us through harvest. So we've got to see if we get any follow-up rains. If we don't, this wheat market's going to have to get a little bit back into the rationing mode.
Yeah, and I think we're definitely turning that picture to the weather here as we get towards spring planting, and of course, just kind of moving forward here the next couple of weeks with that those acreage numbers as well. I think that's going to be the big drivers in this grain market moving forward. Let's switch over to livestock, Jim. Hogs. I wish I had the sound of a squealing pig to play as a sound effect, but we got through that $100 mark in the summer months in June, July, and I believe August made it through that as well. What do you make of us getting through that sort of that quote-unquote wall that we had there in the summer months and got through that $100 mark? August just below it, I guess, 99.80 today.
I think you got to take it as very bullish. I mean, the reality is you got through that psychological number, and I think we probably got more to run. There's two things driving the hogs right now. You're seeing like the pork values go up. You look at the midday cutouts, they're all going higher. Ham prices are going up as we're getting ready for Easter. I think people are optimistic. A lot of people have vaccines. The the Biden administration came out and said, hey, if you had vaccines, you can maybe get together with your family. So, think about how many Americans did not get together with their family over Easter a year ago. So I think we're setting up for a huge Easter demand in that ham market. Then on top of it, the actual amount of supply of pork hitting the market is going to drop. One of the biggest drops we've had from one quarter to the next. So you've got a drop in supply, you get an increase in domestic demand, and you got continued problems in China, which we just don't know how much hogs they're going to buy. But we do know there's reports 6-7 million head of their sows were liquidated over the last couple months to this, re-upping of problems of the African swine flu. Now, we don't know for sure, but to put it in perspective, 6 million head of sows, that's roughly what the U.S. sow population is. So even if that number is off by 50%, it just gives you an idea the kind of devastation this is causing again. And the Chinese want to keep their people fed. So I think it opens the doors to see Chinese demand. So now you've got a domestic herd size shrinking. You got an export demand that could be increasing. And then on top of it, the domestic demand, I think, is going to increase just as the country continues to open up. GDP is going to be strong in the second quarter. It's probably even stronger in the third quarter. People got the stimulus checks are hitting the bank accounts as we speak. Not to mention, a lot of people just saved tons of money because they didn't do anything this last year. And I think there's just a lot of pin-up buying where people want to go out and spend it. And that should be, bullish the demand structure for the protein market.
Yeah, and I definitely think our independent hog producers, not many of them left these days, but they got to be looking at a chance to put some hedges in place here with these hog prices and leave that top side open in hogs as well, Jim.
just like the grains, look at the puts as a way to floor it, keep the upside open. If you do want to protect it, I would go ahead and encourage you look at some vertical call spreads or something on the deferred contracts, because the hard part about it is where is demand going to go? We talked about in earlier, about the inflation in the grains. It's the same situation, that inflation in the food. If you're if you're trying to fight inflation, you buy food. So how much money are you going to get poured into these commodities? We just don't know. So you want to be able to take advantage of it. So keep some skin into the game, as they put it, and make sure you use options to re-own any cash sales, or like I said, use puts to just keep a floor in place.
Let's talk cattle. This market, it's kind of the same story. We're looking at pent-up demand and hopefully seeing more of that go into the beef side of this marketplace. But I know just kind of struggling with cash and with futures and can't seem to close that gap. And, we're setting up this week. We're getting higher asking prices in the countryside. But the question is, are we going to see, packers meet that price? What are your thoughts on the cattle side?
Well, right now, I'm hopeful. Like I said, the cash market's been very, very frustrating. It's been stagnant 5, 6 weeks in a row now. Hopefully, I think we're getting to the point where you're going to start seeing that cash market go up. I think you look at what the hogs are doing. I think that's going to definitely get the trade's attention. The other thing is, as I mentioned, not to beat a dead horse, but the fact is the demand is opening up here in Chicago, which is one of the cities that's been definitely locked down the hardest. One of the big steakhouses was announced they're going to start opening up April 1. Wrigley Field is talking about holding summer concerts and put that lineup out here recently. So that just shows you the demand is out there for it. And I think you're going to see that really start to roar. And I think that demand will trickle into the cattle market and push higher. Patience is going to be a virtue, but I think in the long run, hopefully that patience is rewarded with higher prices.
Yeah, I think patience is going to definitely be a virtue in the cattle markets here. Like you mentioned, we'll see what happens midweek here. We'll see if we can get some trade going in feedlot country. I think that winter storm that moved through parts of the Corn Belt and here during calving season, be interesting to see if that has any effect on cattle here this week. I don't know. It's hard to say. I think with that winter storm, Jim.
It definitely is. I think we're just going to wait and see. But historically, those storms do cause some problems. But like I said, time will tell.
Yeah. Any other final thoughts for us, Jim? I know you touched on inflation a little bit in the macro side of the equation. Any thoughts there, or any other final thoughts to share?
Well, right now, I think the biggest thought I'd share with people is, it's very easy to get very bulled up in these type of markets. Like I said, the inflationary play, the tight grain supply. But the reality is, we just always want to constantly remind producers out there, when it comes down to it, the goal is to make money. And we were at levels, when you think about a year ago at this time, when the market was in free fall, the stock market was in free fall. A lot of people were questioning, where would we be a year from now? As it turns out, we're at some fantastic prices. Don't be afraid to lock in those prices using options. Like I said, you want to consider or using cash sales, but definitely keep your opportunities open. This year, I think, is setting up for a lot of volatility. We've seen some volatility already. My guess, Jesse, is it's only going to get more volatile as we go into summertime, which is going to give us some great opportunities, but maybe a little bit of heartburn. So don't be afraid, producers, to lock in some of that risk.
Well, Jim, I know you and the team at agmarket.net got a lot of great resources, not only with the knowledge on the team, but your website and the app as well, right?
That is correct. You can reach us at our number at 844-424-6758, or go to agmarket.net and download the app at any of the iTunes store or the Google store.
Yeah, check it all out there, agmarket.net, for all the latest. Jim, I appreciate the time here on this Tuesday. Thanks so much, and we'll talk to you again soon.
Thank you for having me on. Have a good week.
Jim McCormick with agmarket.net, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Tuesday, March 16th edition of the show. I'm Jesse Allen, wishing you a great afternoon.